Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KINDER Morgan Inc. quarterly report. Kinder Morgan Inc. offers a diverse range of energy infrastructure services across North America. The company's business segments include natural gas pipelines, owning and operating pipelines, storage systems, gathering systems, processing facilities, and liquefied natural gas, LNG facilities products pipelines, transporting refined petroleum products, crude oil, and condensate through pipelines and associated terminals, storing and handling various commodities such as gasoline, diesel fuel, chemicals, ethanol, metals, and petroleum, coke at liquids and bulk terminals (COTWO), producing, transporting, and marketing (COTWO) for enhanced oil recovery, operating oil fields, gasoline processing plants, and a crude oil pipeline system in West Texas. The company also owns tankers and operates RNG, renewable natural gas, and LNG facilities. Kinder Morgan Inc.'s stock price increase. A year of strong performance in the past year, Kinder Morgan Inc.'s KMI stock price has seen a significant increase of 8.91%, driven by a series of positive financial results, strategic acquisitions, and project developments. The company's strong quarterly financial performance, including increased dividends and revenue growth, has boosted investor confidence. Key factors contributing to the stock price increase include Kinder Morgan's robust earnings reports, with net income rising by 12% in Q4 2024 and adjusted EPS increasing by 14%. The company also announced a series of dividend increases, reaffirming its commitment to shareholder value. Additionally, strategic acquisitions, such as the $640 million acquisition of Outrigger Energy II, have bolstered Kinder Morgan's operations and contributed to earnings. The expansion of Kinder Morgan's project pipeline, with over $10 billion in new capital expenditure projects, has also driven growth. The company's focus on natural gas projects, driven by increasing demand for LNG exports and power generation, is expected to continue driving revenue growth. Furthermore, a joint announcement with Phillips 66 for the proposed Western Gateway pipeline indicates further growth avenues. The combination of these factors has resulted in Kinder Morgan's stock price increase, affirming the company's financial stability and sound management practices. With a positive outlook for sustained growth, investors remain confident in Kinder Morgan's ability to deliver strong returns. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. 1. Commodity sales, particularly in natural gas pipelines, which saw a significant increase of $6,496 million in revenues from external customers. 2. Fee-based services, which grew by 134% to $681 million. 3. Leasing services, which increased by 218% to $365 million. Revenue decline drivers. 1. Fee-based services, which declined by -$666 million. 2. Product sales, which decreased by -$186 million. 3. Energy commodity derivative contracts, which resulted in a loss of -$17 million, Q3 2025. Overall, the growth in commodity sales and fee-based services drove revenue growth, while declines in fee-based services, product sales, and energy commodity derivative contracts contributed to revenue decline. Net income and profit margins overview. The company's net income has shown an increase over the past year, with a rise of $113 million in 9 months, ended 2025, compared to the same period in 2024. However, this growth is overshadowed by a decline in profit margins across both 3-month and 9-month periods. Operating income margin decreased by 1.9% and 2.5% for the 3-month and 9-month periods respectively, while net income margin dropped by 1.8% and 1%. This indicates a decrease in profitability, suggesting that despite increased revenue, the company's costs have risen at a faster rate, eating into its profit margins. The company's financial performance reveals a consistent trend of generating positive operating cash flow. In both 2025 and 2024, the net cash provided by operating activities exceeded $4 billion, indicating a strong ability to generate cash from its core operations. This stability in cash generation is a testament to the company's efficient management and operational excellence. The company's debt levels have shown a slight increase over the past period. Total long-term liabilities and deferred credits rose from $34,439 million to $36,437 million, while long-term debt increased from $29,881 million to $31,499 million. However, total debt only saw a minor increase from $31.788 billion to $32.384 billion. On the other hand, interest expenses have decreased. Accrued interest, net of interest rate swaps, was -$181 million in 2025 compared to -$138 million in 2024. Additionally, interest expenses dropped by $10 million for the 3 months ended September 30, 2025, and by $43 million for the 9 months ended September 30, 2025. Overall, while debt levels have increased slightly, interest expenses have decreased over the past period. The company's financial performance was mixed across various segments and regions. On the positive side, the natural gas pipelines, see Otwo business segment, products pipelines, and Outrigger Energy all saw growth through expansion projects and acquisitions. However, the terminals segment struggled due to a decrease in capital expenditures. Management is optimistic about the company's outlook, citing several key strategies to drive growth and profitability. The primary focus areas include increasing revenues from external customers, investing in capital expenditures to support expansion, and managing costs through reductions in depreciation and administrative expenses. To achieve these goals, management plans to invest $2.2 billion in capital expenditures and $3 billion in expansion projects, acquisitions, and joint ventures. Additionally, the company aims to maintain a strong balance sheet with significant segment revenues of $6.4 billion. In terms of financial performance, management expects to generate net income of $654 despite significant expenses. Furthermore, the company is targeting total segment income of $1,998 and plans to declare dividends of $1.17 per share for 2025. Overall, management strategy emphasizes growth through investment in capital expenditures, cost management, and a focus on segment profitability. The company has made significant transactions through acquisitions and divestitures in recent years. Notably, it acquired Outrigger Energy from Outrigger Energy II LLC for $648 million in February 2025. Additionally, the company made 2 asset purchases in 2024, although specific details are not provided. On the other hand, the company has also engaged in divestitures, selling Otwo assets and Oklahoma midstream assets in 2024. These transactions demonstrate the company's strategic efforts to optimize its portfolio and focus on key areas of growth. The company has a history of paying dividends to its shareholders. Specifically, it declared and paid per share cash dividends in the amounts of $0 and $2,925 in September 2025 and $0 and $2,875 in September 2024. However, there is limited information on share buybacks, with only one instance mentioned where the company repurchased shares worth $7 million in 2024. This suggests that share buybacks are not a regular or ongoing activity for the company. That concludes the financial summary for KINDER Morgan Inc. Feel free to comment below, and I will be happy to answer them when possible.